How do you think a fragmented development lending market, which we've kind of talked about already, how does this impact on transparency in terms of what developers are kind of seeing and what they're getting?
So yeah, that's what we're talking about. I think the market is extremely fragmented. You have loads and loads of lenders, but most of the lenders are relatively small lenders compared to a bank with massive balance sheet, like, you know, a massive high street bank to lend. So the problem is, and I think it's back to what I was saying, is because of the regulation, there's not regulated markets, there's a massive lack of transparency. And we see it every day. You can issue terms. I'll give you an example where we will be lending at 9% with roll-up interest. Another lender might be at 8.5% with retain interest. And sometimes because the market is inefficient, if the broker is not presented to his customer in the right way, the 8.5% might look more attractive, whereas it's more expensive. Because on the retain interest loan, you're going to pay interest on your interest and fees on the interest you're borrowing. So the market is really inefficient. You would think with a lot of players, it makes the market very competitive, which is great for the property developers. But I don't think it's the case today. I think with the lack of efficiency and transparency and kind of standardization of terms issued by the lenders, it makes, yeah, I mean, it's not presented in the right way to the client, to the property developer. So we think one way to solve the problem is really have some regulation coming into the market and making sure. I mean, the bridging market, let's be honest, doesn't always have a good reputation. I think it's for two reasons. One is probably the rates are high, but there's risk associated to it. So that's acceptable in a way. But the other way is because the lenders are not committed to till completion, till the end. We heard a lot of times lenders who changing their terms during the process or increasing the rates or the fees, have some admin fees or monitoring fees on top of the QS fees that are not being transparent, and yeah, the borrower wouldn't expect that. So it creates a bit of frustration and sometimes a bad reputation to the market.